Good afternoon and welcome. My name is Tsepo Kapane and I'm part of the Black Bullion team, the family. And if you're on this webinar, that means you're part of our family. Thank you guys so much for joining us at this lunchtime. There is so much to look forward to. It is the month of love, and this is how we wrap things up. With Black Bullion South Africa, we don't have roses, we don't have chocolates, we don't have kisses, but we do have a fantastic webinar where we will be helping you to fall in love with your financial future, and in particular, the topic of investing. What is investing? Why is it so important? Why should we be doing it? So I'll be answering all your burning money questions in relation to investing. And of course, we also have some goodies. So there's so much to look forward to in terms of today's webinar. So a big shout out to you guys for joining us. And our aim at Black Bullion is to build a community of money savvy youth. People that understand their money, people that make all the right decisions when it comes to their money. So in the meantime, I'd love for you guys to drop me a message in the chat. Let me know, where are you watching the webinar from? So where are you? Are you in Joburg? Are you in Cape Town? Are you in Polokwane? Are you in Limpopo? Where are you currently watching from? I'm all the way in Joburg. It's a little hot, it's a little sunny, but I'm okay. I'm feeling good. So I'd love to hear where you guys are currently located. So please do comment in the chat box. Keen to hear that. In the meantime, while people are typing, I'm going to give you guys a couple of house rules and some notes. So some things to take into some consideration. So please note that the chat box is a great place for you to ask questions, to interact with me, with other attendees, and of course with our team from Black Bullion South Africa, namely Scott. You can interact with him. And during this webinar, we will be giving away 3 Mr. D vouchers. So there is a lunch on us, and I'll tell you exactly how you can get your hands on that Mr. D voucher. And of course, I'll be answering a whole lot of your questions. And please do note that the webinar is being recorded. So I'm keen to see where some people are watching us from. Let me read a couple of your comments. I see Michael Moore saying, I'm all the way in Hartebees in the Northwest. I see people saying, it's been a minute, it's great to be back. It's lovely to have you. So let us know exactly where you are at the moment. Where are you watching us from? I'm keen to know. As I said, I'm all the way in Johannesburg. And if there's somebody you know who's meant to join the webinar, they haven't, WhatsApp them. Give them a quick call to jump onto this webinar. Super excited to be with you guys. So in terms of social media, please do follow us. We are on Twitter. It's at Black Bullion SA. We are on Facebook. It is Black Bullion South Africa. You can find us on Instagram. You can find us on LinkedIn. And of course, you can also drop us an email if that's how you like to do things. This is important because there are some goodies on the line. Right? So we'll be giving away 3 Mr. D vouchers valued at $100 each so that you can have lunch on us. So we'll give away 1 voucher to a person that follows us on social media, 1 voucher to somebody else that is most engaged in the chat box, and then another voucher to the person that asks the best question or comment. And of course, I'm already starting to see some comments and questions as well. I see Amu is all the way in Johannesburg joining us. Janice is watching us all the way from Woodstock in Cape Town. Very, very nice. So we've got people spread across everywhere that are currently watching the webinar, which is absolutely amazing. So keep following us on social media and of course, engage with us on all our platforms. So what is on the menu? What can you expect on today's webinar? So the first thing is we're gonna, ensure that nobody gets dribbled. And I think it's really important that you guys understand the difference between saving, investing, and trading. People tend to confuse the 3, right? We'll then be speaking the language of love because, of course, it is the month of love. So we'll be talking about investment terms. There's certain words that you need to know and you need to know what they mean, right? We'll then be unwrapping investing like a PS chocolate. Then we'll be breaking down the concept of investment risk. What do we mean when we say an investment is risky? You could lose some or all of your money, right? And then we'll talk a bit about why investing is more important than a dozen roses. We'll debunk investing misconceptions. And then for those that are keen to start investing, how do you get some skin in the game? How do you build an investment portfolio? And then we'll have a little bit of a Q&A, and then of course, lunch on us. 3 people will be getting some vouchers. I'm already jealous and wishing that I was getting 1 or 2 of those vouchers. So before we get deep into the webinar, I want us to have a moment of truth, right? I want to know from you guys, what is your investing confession? Could be something good, could be something bad. It could be the fact that you're joining the webinar and you know absolutely nothing about investing. It could be that you already invest and you've made some mistakes. It could be that in the past you fell for an investment scam. I want to know, what is your investing confession? Let's have a moment of truth. So get onto the chat. Let me know, what is your investing confession? As I said, we are giving away that Mr. D voucher for somebody that interacts, that comments, that asks the right question. So get onto the chat. And so to inspire you guys to be honest with this moment of truth, I'll be honest about my investing confessions, right? And investing for me has been a constant journey of patience, of discipline, of education, and trying to control my emotions. I've done well with my investments, but I've also made a lot of mistakes, right? So I'm going to share my 5 investment confessions. The first confession is that I started investing at a very young age. So I started investing when I was 20 years old, and I do not have a finance background. So, you know, I've spent time studying, reading, trying to understand how money works, how the markets work, right? That's my first confession. My second confession is that I am a very, very, very lazy investor. Let me explain what I mean by I'm a lazy investor. So I use a lot of financial apps, a lot of financial tools. I get advice from my financial planner. I use a variety of trusted sources on information when I need to make an investment decision. So I use a lot of resources to make decisions, and a lot of these resources are backed by experts, right? So I'm a lazy investor, and there's nothing wrong with that. The third confession I have is I've made and I've lost money when it comes to investing. Steinhoff got me good. I was one of the investors that were caught out. So I've made money and I've lost money. So investing is risky, but it's all about mitigating this risk. So how do you ensure that you reduce the risk? And we'll get into this idea of mitigating risk. What does it mean? My fourth confession is that I have an investment learning spirit. So I don't know it all. I don't even pretend to know it all, but I spend time doing research, reading, experimenting, getting some skin in the game. My last confession is I've had a lot of WTF moments when it comes to investing, where I just feel confused, I feel intimidated. It happens to all of us. And I'm hoping that during this webinar, you don't experience any WTF moments where you're like, what on earth is Tsepo talking about? So I'm going to try and break things down. And of course, if there's something that's still confusing you, you have the chat, drop your question, and I will be answering it later in the webinar. So those are my investment confessions. Let me go and see if other people have confessions, if other people are willing to be honest and to share some of the things that they know or don't know when it comes to money. So Farm Spaces say, Ish, I once invested in something called Triple M. All my money was gone. This pyramid scheme was horrible. So we have somebody there saying, I've invested in the pyramid scheme. I lost money. It was horrible. Farm Spaces, we will be talking about investment scams. So how do you identify it? And how do you avoid investment scams? But thank you so much for sharing. Michael Moore says, this is my confession. I can be impatient sometimes, and I let my emotions get the best of me, but I'm working on it. So one of the things that you'll learn when you start investing is you need to be able to control your emotions, but you also need to be very patient, right? Investing is for the long term. It's all about patience. So thank you guys so much for sharing some of your investment confessions and me sharing some of my investment confessions with some of you guys. So I see a couple of more people are joining us as well. I see somebody here is out in JHB CBD. So this is a homeboy, somebody that I know because I'm also in Joburg as well. So let's get into this idea of investing, all right? And we're going to start at a very interesting place. I don't want you guys to get dribbled. What do I mean by I don't want you guys to get dribbled? What I've learned is that a lot of people don't understand the difference between saving, investing, and trading. People tend to confuse these things, right? All three of them relate to money. However, the objective of all three is different. The timeline for all three is different. And the level of risk for all three is different. So I want to explain what saving is, what investing is, what trading is, and then we will focus on investing. So when it comes to saving, you save with the intention to spend. So you are saving towards a holiday, you're going to spend that money. You are saving up towards having some sneakers, you're going to spend that money. So you save with the intention to spend. And saving is usually short-term in nature, where the objective is to preserve your money. So you want your money to be there. And with saving, there are lower returns, so the interest rates tend to be lower. And because there are lower returns and lower interest rates, there is a lower risk of you losing your money, right? When it comes to saving, you also have immediate and easy access to your funds. So if you put money into a savings account, you can withdraw that money at any point in time. You can send that money to somebody. You could do a lot of things. So you have easy access to your money when it comes to saving. And when it comes to saving, it's normally for less than 5 years. And you can save money in a savings account, in a money market account, in a tax-free savings account, and even in a fixed or a flexi deposit account. So there's various ways for you to save money. So you save with the intention to spend. This is where investing is a little bit different, right? You invest with the intention to earn, right? So you invest with the intention to earn. So investing is for the long term, and the objective is to grow your money or to acquire income generating assets, right? So with investing, there are higher returns, which means there's higher interest rates. But because there's higher returns, there's a higher risk, right? There's a higher chance that you could lose your money, you could lose some of it, you could lose all of it, right? And normally with investing, there is a delay in accessing your funds, and sometimes there's a penalty. So, when you buy shares, you need to sell the shares, then there's another 5 days before you can actually access the money. So normally with investing, you don't have immediate access to your money as opposed to saving, right? And when it comes to investing from a timeline point of view, normally when we invest, it's for more than 5 years. And then of course, you can invest in various things. You can invest in shares, in exchange traded funds, in investment property, in livestock, crypto, art. You can even invest in wine. Yes, it is possible. So last but not least, we're going to talk about trading, right? So you trade with the intention to earn quickly. So the quickly aspect is very, very important. So you trade with the intention to earn quickly. So trading is very short-term in nature, where the objective is to make profit through speculation, right? So it's short-term, trading happens daily, there are high returns, but there's also a higher risk that you will lose your money because of market volatility. You hear that English, volatility. What that basically means is prices going up and down. How frequent does that happen? So in trading, there's a higher risk because of market volatility. You have easy access to your funds when you're trading, but trading requires some specialized knowledge and devices. So you have to have some specialized knowledge. You have to have a laptop. You have to have data. You have to have software. You have to have all these other things. And then, of course, you can trade in various things. You can trade in crypto, in commodities, in currencies. So that is trading. So remember, you trade with the intention to earn quickly. The difference between trading and investing, which is one that people often get confused with, is that investing is for the long term and you are acquiring income generating assets. So don't get dribbled. That's the difference between the three, right? Should be simple. So another thing that I've also learned is that, people often get investing, you often feel like investing is complicated because of the language, the lingo around investing. So one of the things that we need to do that's really important is start speaking the language of investing, right? There's some common terms that you will come across in the world of investing that you need to understand. It's the lingo around investing. And so these are a couple of terms that I want to touch on. I'm going to explain what these terms are. And then, of course, during the course of the webinar, you hear me using these terms so that you guys can get used to them. But when you start doing your own research, you will come across these same terms. So the first term is a share, right? So a share is also called an equity or a stock. It is a stake in a company, right? It's a share of ownership, right? And this share can be in the form of a physical or a digital certificate. So I could buy shares in a company and you own that share. Then we have something called the stock market, right? So when a company wants to sell shares to the public, to us, it has to go to a marketplace. This marketplace is called a stock market. And in South Africa, we have the Johannesburg Stock Exchange, the JSE. So that's what a stock market is. Then we have a stock broker, right? Don't get this one confused, right? So your stock brokers and your financial service providers, these are companies and online platforms that allow you to buy and sell shares on the stock market. So this is what basically happens. They are provided with a special license that allows you to be able to buy and sell shares, and they keep records of all of these transactions. So you can't physically go to the JSE and say, give me Capitec shares. You need to go through a stockbroker who will do that on your behalf. So that's the role of a stockbroker. So you can't buy and sell shares at the stock. You can only buy and sell shares at the stock market through a broker, right? So that's a share, that's a stock market, that's a stockbroker. Some other terms that you'll come across is portfolio, right? So your portfolio is your cash, your shares, your bonds, your different investment assets that are owned by an investor. All those things put together are your portfolio. So you sometimes hear people bragging and saying, oh, my portfolio is massive. What they really mean is they've got all these different assets that create a portfolio. So it could be shares, it could be cash, it could be crypto. All those things put together is a portfolio, right? Another term that you'll come across is diversification, right? And this is a strategy. It's a strategy where you mix different types of investments within your portfolio so that you can reduce risk. You know, this notion of not having all your eggs in one basket. That is what diversification is. So instead of just buying shares only or only buying crypto, when you diversify, you buy different types of assets. And later on, I'll tell you what these assets are. But you can buy bonds and buy crypto and have investment property. That's part of diversification. It's a strategy. Then another one is risk, right? And so risk are factors that have the potential to negatively impact the value of your investment. So it's the likelihood of you losing your money, right? And so volatility is part of risk. So prices going up and down is part of risk. So crypto is considered as high risk because it is volatile. The price is always going up and down. So that is risk, but we will expand a little bit on what risk is and give you guys a better understanding of it. Another thing to understand is risk tolerance. There's a lot of English today. Risk tolerance. So risk tolerance is the degree of risk that an investor is willing to take. So how much risk are you willing to take? That is risk tolerance. And then last but not least, it's one of my favorite words. It's dividends, right? So when a company makes a profit, it might decide to give some of its profits to the owners of the company, the shareholders, right? And this payment is called a dividend. And the amount paid to each shareholder will be determined by the amount of shares that they own. So as an example, we could buy shares in a bank. As an example, the bank is doing really well. And the bank says, for each shareholder, we're going to give them 10 Rand. So if you have 1,000 shares, it's 1,000 times 10. And that's the money that they're going to give you as a reward for holding the share. Because you are a shareholder and you should celebrate and enjoy the fact that, you know, this company that you've invested in is doing really, really well. So it's really important that you understand the lingo, the language, so that you can better understand investing as a whole. So I think what's really important is that we need to unwrap investing like a PS. Can you hear that love connection? Because it is the month of love. So we're going to unwrap investing like a PS. And so investing is a very simple concept, right? You are putting money into an asset that you expect will increase in value, or it'll provide you with an income over time. What do I mean? Let me break this down for you. So we'll use a car as an example. A car is an asset, right? But a car depreciates in value. So the moment you take ownership of the car, it starts to lose value. However, a car can provide you with an income. So you can decide that I'm buying this vehicle and I'm going to use it as part of the e-hailing services, right? So it might be decreasing in value, but it's actually providing you with an income. And that's part of investing, right? On the other side, you've got an asset like a property, and a property tends to increase in value over time, and it can also provide you with an income through rental, through an Airbnb. So investing is a simple concept. You are putting money into an asset that you expect will increase in value, or it'll provide you with an income over time. Or with something like property, it can do both. It'll increase in value, but it can also give you an income as well. So you can invest in various things, but it is important to understand that every investment involves some level of risk, right? And despite the fact that investing can be risky, it's better than stuffing all your rands and cents in a piggy bank, or trying to put it under your mattress, right? It's better than doing that. So investing is important because of inflation. And in a couple of slides, I'll explain exactly what is inflation and what is this link. Why is investing so important when it relates to inflation, right? So when you invest, you're putting your money to work. And if you manage the risks and you invest your money wisely, then over the long term, your investments can be more than when you started, right? So that's us unwrapping investing like a PS. And like I said, a big part of investing is understanding what is risk. What is this risk that you keep mentioning? Why is it so important? So, risk is important in terms of investing. And one thing that you should understand is that the different assets that you can invest in have different levels of risk. And I'm going to explain what this means. So, as I mentioned, all investments have some level of risk, and risk is the likelihood that you will lose some or all of the money that you've invested. And this can be due to your investment falling in value or not performing how you expected. So you invested 5,000 Rand in a specific share, and that share price is going down. So the 5,000 that you've invested is now 2,000 or 1,000. That can happen in investing, right? So if you look at this beautiful diagram, right, on my presentation, right at the top, it says high risk, right at the bottom, it says low risk. So when you move from the bottom to the top, right? So when you go from low risk to high risk, right, investments, your return tends to increase. So the lower the risk, the lower the return, the higher the risk, the higher the return, right? So right at the bottom where it is low risk, those are individuals that invest in cash. So cash can be considered as an asset. It is low risk, which means it is low return. And so these types of individual have that investment mindset that they want to see a little bit of a return, but they do not want to lose their money, right? And then as we move up this diagram, it is moderate, and then right at the top, it's moderately aggressive, then right at the bottom, it's moderately conservative. So these are individuals that will invest in shares, in commodities, in property, and it's considered as moderate risk. So they can tolerate a loss. So they are aware that I could lose my money, but because I want to get a little bit of a return, I'm willing to take that risk. Then right at the top, high risk. These are individuals that don't mind losing money. They tend to invest in something called alternative investments, things like crypto, right? Which are considered high risk. These are the individuals that will be investing in those types of things, and they tend to not mind losing money, right? So for the investors, this is the pro tip, right? For long-term investors, volatility or risk can always present an opportunity, right? So if a share price is going down, it's an opportunity for you to buy that share while others are panicking and selling. Sometimes it's a good idea to buy when it's going down. Sometimes it's not. I'm going to explain this a little bit later. But as a long-term investor, generally risk provides you with an opportunity. You just need to determine, what is my risk tolerance? How much risk am I willing to take? Am I comfortable losing all my money, losing a little bit of my money, or do I not want to lose anything at all? And then that will help you to also determine what type of investments should you be in, right? So I did mention earlier on that inflation is one of the key things when it comes to investing, right? It's one of the big reasons why we do invest. It's around inflation, right? So investing is the best way to fight inflation and to build wealth. So what is inflation? Inflation is the rate of increase in prices of goods over a given period of time. It's a big mouthful. I'm going to say it again. Inflation is the rate of increase in prices of goods over a given period. So let me give you guys an example, right? So what you could buy with 100 Rand at the supermarket last year is less this year. So that bucket of goods that you would have bought last year, this year, there's less goods in this basket. And that's because of inflation. So high inflation eats into the buying power of your money. So every year you need more and more money to buy goods. And investing is a great way to increase and to grow your bucks. So your reward for investing long term is to outperform inflation. What does this mean? If the inflation rate is 6% and your investments are 10%, that means you are outperforming inflation and your money is actually growing. And there's a lot of people that are able to do this. And so I'm going to tell you guys a little bit of a story of how some investors turned 2,000 Rand into more than 1 million Rand, right? So let me know in the comments if you can guess which bank I'm going to be referring to. I won't say which bank it is. So in March 2001, there was a certain bank that was launched, right? And there was immediate doubt that this bank would succeed. There was a lot of negativity in the media. A lot of investors were like, banks are closing down. We're not sure if this is a good time to launch another bank. And so a year later, this bank decided to go to the marketplace. They decided that they wanted to go onto the JSE so that individuals like you and me could buy shares in the bank. And so this was in February 2002. And at the time, a share would have been 2 Rand 75, right? 2 Rand 75 if you wanted to buy a share in February 2002. A month later, in March of 2002, the share price went down. It tanked. So it went from 2 Rand 75 all the way to 18 cents. And people panicked. People started selling their shares, and people were like, there's no way this bank is not going to succeed. But a smart investor would have seen an opportunity. A smart investor wouldn't have panicked. They wouldn't have let the emotions get a hold of them, right? So fast forward to 2023, and this bank is still active. So it currently has 840 branches. They've got more than 15 million clients, right? And a single share, I checked this morning, a single share is 1,753 Rand and 49 cents. All the way from 2 Rand 75 to 18 cents to 1,753 Rand and 49 cents. So if you had invested 2,000 Rand in this bank in 2002, you would have 1.275 million Rand. And what's even crazier is all you needed to do was to buy the share and hold the share and do nothing. You don't work at the bank. You might not even have a bank account there, but you are earning in the profits of the bank. You're benefiting from this bank doing well. And that's really the secret of investing. It's investing in assets that you believe will grow over time and then being patient, right? So when it all of a sudden hits 18 cents, everybody's panicking. But some investors said, whoa, I'm going to hold on to this. And that's how some individual turned 2,000 Rand into more than 1 million Rand, right? It's absolutely crazy. By the way, I am a shareholder in that bank, and later on, I'll be sharing what my investment portfolio looks like. But drop me a message in the chat. Let me know if you can guess what that bank is, right? And so with investing, I think there's quite a lot of misconceptions and misinformation, right? So there are all these misconceptions about investing. It's for specific people. It's this, it's that. So I want us to debunk some of these misconceptions. Like when you start your journey, you started on a clean slate, right? So here are some of these misconceptions that I'd like for us to debunk. The first is there's this misconception that when it comes to investing, you can become rich overnight. No, this is not true, right? And this is why scams are so successful, right? So, the odds of you becoming rich overnight when it comes to investing are highly unlikely, right? but you can make a lot of money. So it's all about investing for the long term, but also understanding that your investments do have risks. So it's highly unlikely that you'll become rich overnight, right? The second misconception is that investing is for the wealthy and it requires large sums of money. It's one that I always hear. So no, this is not true, right? So you don't need to be Petrus Motsepe to start investing. In fact, you can start buying shares on the JSE, you can start buying some crypto, you can even buy gold for as little as 10 Rand. Right? I'm going to share how you can do all of this, believe it or not. So you don't need to be rich to get started. The third misconception is that investing is complicated and you need to be really, really smart, right? And this one too is not true, right? So you don't have to be smart to start investing. You just need to have that desire to want to learn, right? I think sometimes we make investing complicated. We use all this big language. So you do not need a PhD to start investing. I was able to start at the tender age of 20 years old. So you don't need to be smart. You don't need to be a genius to start. Another misconception that tends to come up is that investing is too risky. It's too risky, and you are guaranteed to lose all your money. So there is no doubt, as I mentioned earlier on, that investing is risky. You could lose some of your money, but it is not a guarantee, right? That's why it's important to do your research, to identify your risk tolerance. How much risk are you willing to take? And then to try and mitigate that risk by building a diversified portfolio, right? And last but not least, the last misconception that we will be debunking, this relates to always buy the dip and try to time the market. And so this relates specifically to buying shares, right? So there's a notion that you should always invest in shares and commodities such as gold or silver when the prices are low. You should always do it. We refer to it as buying the dip. And I don't think it's true, right? What I've learned over time is that time in the market is more important than trying to time the market. So a simple example is with Steinhoff as an example, I was holding the share, it was going downhill because obviously now there are all these allegations of fraud. And if you stick to this notion, always buy the dip, you would have been buying a share of a company that is going downhill without even doing any research. So you don't always need to buy the dip or try to time the market. Just invest consistently, but always ask questions. Why is the price going down? What's going on? So that's one of the investing lessons that I got in my journey. So I'd love for you guys to spill the tea and get into our chat box. As mentioned, you could win yourself that $100 voucher that is valued at $100 to have a little bit of some lunch. I want to know from you guys, how much do you think you need to become financially free? We all define financial freedom differently, but I'm keen to know from you guys, how much do you think you need to become financially free? So let me dive into some of the comments. I haven't read a lot of comments in a minute. So Michael Moore wanted to know, was I referring to Capitec? Yes, I was. And he talks about something called FSR, which is something that I'll explain a little bit later. It's called fractional share ownership. And we'll talk a little bit about that. I'm seeing a couple of people saying one of your big mistakes, TK, is Steinhoff, and they put this emoji. So back onto spilling the tea. I'm keen to know from you guys, how much do you think you need to become financially free? I think we all define a little bit differently. So I did a little bit of some research on my own yesterday. I used a platform that's got this tool, and within that tool, I'm then able to see how much do I need to become financially free. And the number it gave me is 5 million. So I apparently need 5 million to become financially free. But I'm keen to know from you guys, how much do you think you need to become financially free? And as I mentioned, you could win yourself some of those Mr. D vouchers valued at $100 so that you can have some lunch on us. So I'm seeing a couple of questions as well that are coming in. Absolutely love that. Keep sending in some of your questions. I see somebody here saying, I definitely need more than 10 million Rand to become financially free. So people are throwing all types of numbers. As mentioned, doing some research yesterday, I figured out that the number I need is 5 million Rand. So get onto the chat box, let us know how much you need. So as I mentioned earlier on, I think we all define wealth and financial freedom differently. And for me, this is the recipe that I use. It's a recipe that I'm going to share with you guys. And what you will notice is that investing is an important ingredient in my financial freedom recipe. So these are the 5 things that I do in terms of trying to build wealth, but also experiencing financial freedom. The first is you need to succeed in the art of budgeting. So I create and I follow a realistic budget, right? So you always need to ensure that you're spending less than you earn. The second is you need to get rid of bad debt. So you need to start paying off as much debt as you can. Number 3 is I've built an emergency fund. So that emergency fund covers 3 to 6 months of all of my expenses. Number 4 is I've built up an investment portfolio, right? So I've started acquiring income generating assets by investing for the long term. And this is one of the difficult steps to invest and to be consistent at it, right? And so once the income that is generated by my assets starts covering my monthly expenses, then I'm on the right path to becoming financially free. So this is the recipe that I use. You have to budget. You have to pay off some of your debt. You have to build up an emergency fund because ish happens, things happen, right? Number 4, you need to build an investment portfolio and you need to start acquiring income generating assets. And then once the income that is generated by those assets starts to cover your monthly expenses, then you start to move into the realm of becoming financially free. I see one comment here coming up. I think this one comes from Jermaine, and it says, myself personally, I think I at least need $1.5 million to be financially free. That means paying off my house, my car, and all my other expenses. So people have different types of amounts. Somebody else was saying 10 million, somebody else was saying 1.5. So different types of amounts coming from people as well. So this is my recipe in terms of becoming financially free. And then, of course, what are the various types of assets that you can actually invest in, right? So there's 4 asset classes. So you have cash, which I did mention earlier on, is an asset. You've got property, it could be physical property. You've got equities and commodities. So these are your shares, your exchange traded funds, your unit trusts, your gold, your silver, and then you've got your bonds. And in South Africa, we've got the RSA retail bonds that can give you 9% interest. And a bond is basically you giving the government a loan and them paying you back, right? So you've got cash, property, equities and commodities, and you've got bonds. And then, of course, you've also got something called alternative investments, right? So these are your financial assets that don't fit into the above categories, right? So these include stuff like crypto, art, wine, classic cars, livestock, solar panels, blueberries, and even beehives. And one of the pro tips that I'm going to give you guys is, you need to invest in the things that you understand. So it's very, very important to do research, to speak to a couple of experts as well in the field. So these are some of the different types of assets that you can invest in. And of course, for those that want to get a little bit of some skin in the game, those that want to start building an investment portfolio, these are some of the steps that you can follow in terms of doing that. So despite your financial circumstances, it is possible to start investing, right? Provided that you are determined, you are patient, you are disciplined. And these are some of the steps that I want you guys to consider in terms of starting your investment journey. I did mention that you do not need to be rich to start investing, right? So I did say that you can start buying shares from as little as 10 Rand, you can buy gold, you can buy crypto. You don't need these big sums of money. And so the first thing to do is you need to understand and define your investment objective. In other words, what do you want to achieve? What are you investing towards and for how long? That's a really important thing, right? The second is you need to determine how much money can you invest monthly. And the only way you can do that is you need to create a budget, right? So you need to know how much money is coming in, how much money is coming out. My belief is that part of controlling your money is having a budget, right? So you need to prioritize your spending, you need to tackle your bad debt, you need to build up your emergency fund, and then you need to decide how much money will you save, right? And most financial advisors will recommend that you save 15% of your income, and that the best way to grow your savings is to invest wisely, right? But to invest, you need to have money. So you need to start by budgeting, right? Step number 3 is you need to start doing a little bit of some research. You need to start asking questions. You need to see a financial advisor or a financial planner. Some of them have free consultations. Some of them you can even see via your bank, right? So you need to start getting curious, read some local investment books, listen to podcasts, follow some Finlit peeps on social media, including Black Bullion South Africa. So you need to start getting curious, right? Number 4, you need to decide on what assets you want to buy based on your risk tolerance and based on what you want to achieve. What are your objectives? So you need to decide, what do you actually want to invest in, right? So for an example, if you plan to invest for more than 5 years, it's going to be different in terms of the assets that you get as compared to somebody that wants to do it for less than 5 years, right? So you need to start, buying those assets based on how much risk do you want to take and how much time do you have to invest. And then number 5, you need to get some skin in the game. So you need to actually start investing, right? And so you need to find a stockbroker, an investment company to start your investment journey, and you need to watch out for the fees. Fees will eat into some of your profits, which is my pro tip. And then last but not least, you need to keep pushing forward. So you need to stay focused, you need to control your emotions, you need to play the long game, and you constantly need to keep educating yourself, reading, listening to podcasts. It's a consistent journey that we go on. You never get to a point where you're like, I know everything, I'm the best investor. Very few people get to that type of place. And then another important thing is understanding the rules of the game. So, whether your investments are positive, are negative, whether you've been great at investing or you've been making mistakes, there are certain investment principles that you need to remember. They never change irrespective of how your investments are doing. So the first is remembering why you started, right? Why did you start this journey to building wealth, to acquiring these income generating assets? Why? Why did you do it? And this will help you to stick it out during some difficult moments. Number 2 is to remember that investing is for the long term. You need to be patient. You need to be disciplined, right? So you also need to learn to control your emotions. So if all of a sudden the shares that you've invested in, they are not doing well, it's all red, you're losing money, you need to control your emotions. You need to remember it's a long-term investing. You need to be patient and you need to be disciplined, right? The third is you have to build a diversified portfolio. It will help to mitigate some of that risk. So you can't put all your eggs in one basket. You need to invest in different types of assets. The fourth thing is you need to learn to do your own research, right? So one of the things I mentioned earlier on is you need to invest in the things that you understand. So anything that requires your money requires your research. That's the way that I see it. And I did mention earlier on, I'm a lazy investor, so I'll use different types of apps, different types of tools to let me understand what is going on in the market when I need to make a decision. And then last but not least, understand all the fees that are involved. Once you found a stockbroker, you found an FSP, an investment company of some sort. So always minimize your fees. So there could be monthly fees, there could be platform fees, there could be management fees, and they all eat into your profits, and you really need to understand them. And then earlier on, somebody had spoken about how they'd fallen for Triple M, which is an investment scam. And when you get into the world of investing, you're starting to get curious, you will come across different types of scams. And there's a lot of them, and scammers are becoming so sophisticated in the digital age. So some of them will even pretend to be a representative of an existing company. They will have the company's logo, the material, and then they will send you to a specific website. So we also need to become very, very smart. So these are some red flags to help you guys avoid falling victim to investment scams. The one is, if there are any promises of very high guaranteed returns in a short period of time, stay away, guys. High promises, guaranteed returns, short-term period, all of those things go against the investment principles we just spoke about. Investing is for the long term. Investing can be risky. There are no guarantees, right? Number 2, if the individual puts pressure on you to make a decision quickly, so they'll tell you that time is running out, this offer is only for 2 days, you need to try and see what's going on over there. Number 3 is if they request upfront fees or a deposit before you open up an account, before you complete an application, before you do FICA, something isn't right? Normally, when you are with an investment company or stockbroker, you go through a certain process before you need to make a deposit or before there are any fees. So you need to, complete an application, you need to open an account, you need to do your FICA. If those things are not being done, something isn't right, right? So another red flag is if they contact you on social media, in the DMs and WhatsApp, using a free email account, they start giving you financial advice. You need to be cautious of that. And then the last one is, in terms of avoiding these triples, these investment scams, is if they come to you with an exclusive offer, this inside information, nobody else knows about this crypto coin, you're the only one, know that something isn't right. So try by all means to avoid these numerous investment scams that exist. So earlier on, I did say that I'd quickly share what is in my investment portfolio, giving you guys a little bit of a peek into what I currently have. So in terms of assets and platforms, I've got a little bit of some cash. So I've got cash in the form of savings. I've got cash in a money market account. And then I do have some retail savings bonds. I have gold through a company called Troy Gold app. And I own gold. You can own gold for as little as 10 Rand. And then I have some shares. I've got unit trusts. I've got exchange traded funds through Easy Equities. They've got the lowest fees. And of course, you can buy shares for as little as 5 Rand. I've also got some blueberries, believe it or not. I've got some solar panels through Fed Group. And then I've got livestock, so 1 or 2 cows through SV Investments. And then, of course, I've also got some crypto through Luno, Vivix, and Vla. So I've got different types of things that I've invested in: cash, gold, shares, unit trusts, blueberries, solar panels, livestock, crypto. Got all of those things, in terms of my portfolio. And some of my fave things in terms of shares locally on the JSE: Datatech, Capitec, Renergen, Santova. Those are some of the shares that I have from a local point of view. In the US stock market, I've got shares in Visa, in Merck, and ExxonMobil. And then, of course, I've also got some exchange-traded funds, the Capped All Share, Fin15, and a couple of others. And then in terms of crypto, Solana and Ethereum are crypto coins that I'm a huge fan of. So that's a little bit of what my portfolio looks like. And of course, it's time for that Q&A. So if you have any burning money, burning investment related question, like I mentioned, I'm not a financial advisor, so I can't give financial advice. I am an educator and I am an investor myself. So I'm happy to share some of my own knowledge, some of my own experiences, including some of the mistakes that I've made along my journey. I've made a few, Steinhoff being one of them. So if you do have a question, pop it into the chat. Be happy to go through it, through some of that stuff and share a little bit of the knowledge that I have. And of course, I'm also going to be reading some of your comments. And remember, we will be giving away some of them vouchers as well. So let's see what people are saying. Michael says, I started my investing journey with 100 Rand. Jeez, man, $100. It's possible. It's something that you can definitely do. So Amu says, what are examples of income generating assets? So there's various examples of it. So you can, as example, buy investment property. Could be a physical property if you've got the money. You can rent it out. Then you can make rental income, or it can be part of the Airbnb space, or you could buy property stocks. So you can invest in companies that own property and then earn dividends. So dividends is also a form of income generating assets. Earlier on, I used the example of a car as an example. You could buy a vehicle and you could get it into the e-hailing space, right? You could buy gold, hold it for a little bit of some time. You could buy shares, you could buy crypto, you could sell that stuff, and hopefully the value of the investments has gone up, and that then provides you with a little bit of an income. So, all the assets that you're buying, either one, increase in value, or two, can provide you with an income, or they can do both, right? So when I go back to my portfolio, it's a whole lot of different things. Some of them give me an immediate income, such as dividends. Some of them I'm holding because I'm hoping that in time, they'll start to increase in value. I hope that answers Amu's question. Jermaine says, what in your portfolio has given you the best growth for your money? Funny enough, this is not going to be a popular one. It's crypto. So crypto is highly risky, but I bought crypto at a very interesting time. So crypto has performed really well in my stocks. My ETFs, exchange traded funds, have performed really well. And some of my shares have also performed very well. But some of the shares that I bought a long time ago. So as an example, I've got Capitec, and I bought Capitec, I think it must have been around 2014, 2013. and we're now in 2023. So I've made a little bit of some bucks, but it takes some time, and of course, it takes a little bit of some grit and patience as well. Let me see if there's any more questions coming up. One of the questions that I'm getting is, are there any taxes involved when you invest? Yes, SARS will never let you be great. They'll never leave you alone. There are always questions coming up in terms of tax, and yes, there is a tax. So there's something called dividends tax. So if you own shares specifically and you're earning dividends, there is a tax that is applied. There's also another tax called capital gains tax as well. So yes, there are taxes when it comes to some of your investments. Let me see if there's any other questions coming up. Somebody wanted to know, is crypto a bad investment? Crypto is a very tricky investment, and I'll tell you why. I'm a big fan of crypto. So we'll use Bitcoin as a very, very simple example because it's the one that everybody tends to know. So demand and supply is what pushes the crypto price up and down, right? So there's only 21 million Bitcoin. People don't know. There's only 21 million, right? So supply and demand will always impact on the price. If everybody's selling their crypto, then all of a sudden the price tanks. If everybody's buying crypto, all of a sudden the price goes up. But because it's such a small amount of crypto, external individuals can also impact on crypto. So if tomorrow Elon Musk says something about Bitcoin, guaranteed that price is going to go up, because one, he most likely probably has quite a lot of it, but he's got so much impact in a very small community, right? So it's quite easy to sort of play around and to have an impact on the demand and supply. But where I see the value is with the technology that drives crypto. So there's something called the blockchain, and a lot of companies are starting to use the blockchain as a way to start running some of their business. There's something called smart contracts. So for me, the technology that drives crypto is more important. But yes, I do own some crypto. So I wouldn't say it's a bad investment, but it's a very, very high risk one. So always speak to an expert, do some of your research. That type of stuff is very, very important. Let me see if there's any other more questions coming through. Depoa says, I need imali eningi to be financially free. So I can't even quantify it. So that's a comment coming from Depoa saying, I just need a lot of money to be free. So lots coming in from people in terms of some of their questions. Let me see. Paul says, I use Sun Exchange to buy some solar panels. It is absolutely amazing. It's one that I'm actually researching. So the idea is they find a community, they find a school as an example, they find a farm, and they build solar panels, and you can own some of those solar panels. It's really, really cool. And Pablo says, would you guys be willing to give some crypto lessons at some point in time? I hope that's the question that you're asking. Maybe we might do a crypto webinar in the future. Who knows? So those are some of you guys' questions coming through. Thank you guys so much for all of that in terms of some of your questions with regards to crypto, investing, tax, and a little bit of what I have in terms of my portfolio. So it's about that time where we're going to make some people happy, right? We need to find some winners. And as I mentioned, there are three categories, right? So there's a voucher for the person that was the most engaged in the chat box. There's a voucher for somebody that was following us on social media. And then there was one for somebody who had the best question or comment. It's $100 voucher so that you can have lunch on us. And if you are one of the winners, we will email you after. So when we're done, we will pop you that email in terms of who some of the winners are. So drum roll, please. Imagine these are my drum rolls. So for most engaged, that one goes to Michael Moore. Big shout out to you. Big shout out to you. You were very engaging in terms of that chat box. And then in terms of our social media, Janice Cameron, she's won herself a $100 voucher. Big shout out to you. And then the best question came from Jermaine. She was asking amazing questions in terms of that. So big shout out to Michael, to Janice, and Jermaine for winning those vouchers valued at $100 in terms of investing and for participating in today's webinar. A big shout out to you guys. I see there's still comments coming in. Remember to follow us on all our social media platforms. I do hope that you guys have enjoyed our webinar. So as I mentioned, investing is a very interesting journey. It can be difficult. It has all of its challenges. But if you have the will to want to learn, take it easy, take it slow. Don't put yourself under pressure. Do a little bit of some research. Speak to your financial advisor. Buy some investment books. Listen to some podcasts. Follow us on social media. It is a journey that you must undertake. It's a journey that I am on. And as I've mentioned, I've gotten my fingers burned once or twice, but I keep learning. And that's, a big part of investing. Right? So that brings us to the end of our webinar. Please do follow us on social media. On Twitter, it's at Black Bullion SA. You can find us on Facebook. It's Black Bullion South Africa. We are on LinkedIn as well. We are on the gram at Black Bullion SA. And of course, you can always drop us an email. It's blackbullion@wafunda.com. Thank you for joining us this afternoon as we wrap up the month of love with an Investing 101 webinar brought to you by Black Bullion South Africa. And we're just in time. I was able to wrap it up within an hour. Thank you so much. Keep following us on social media. And of course, start your investment journey. Start with 10 Rand, start with 5 Rand, start with 50 Rand. Start that investment journey. Thank you guys so much for joining us. Thank you for all your comments. Thank you for all your questions. And we'll catch you at our next webinar.